Okay, everybody. So this is going to be the watch list for Monday, March 23rd. And looks like this week should be way less eventful than last week with FOMC, OPEX, where we had $6 trillion worth of options that were expiring. Total chaos in the market. And the market really was not observing technicals all that well. So just let's look at the news events real quick. Monday, we really have nothing. Construction spending doesn't move the needle, so I wouldn't worry about that. And that's back to January. Tuesday, we're going to have some PMI, so that one do be cognizant of, especially 15 minutes into the market open. So again, pretty light week. We have import prices coming in on Wednesday. That's going to be early, so not too concerned about that. And then Thursday, really jobless claims, but a lot of Fed governor speak toward the end of the day, which could impact Friday morning. But we'll just see how this goes. Friday, all we have is consumer sentiment. So a very light data week, which is good. We also have very light earnings. Don't really have anything that's going to move the market. The only thing that you might want to pay attention to is going to be some of the cruise lines, maybe Carnival. But other than that, I really don't see anything that's going to, directionally bias move the market one way or the other. So light news week, light earnings week. I'm anticipating that we should see some really good trading opportunities. Okay. On Friday, clearly they flushed some of the lows. All the way back down to the fall of last year. So if we go all the way out and you can see where were we trading at this time, this was going to be last year in September. Okay, so we have really pushed this market to the downside. Looking for some overall foundation here for it to stick, especially above this 640 number. We get below that, then what I would definitely use is obviously make sure you're watching your daily pivots. Okay, so those are going to be monumental to make sure you have those charted. And then everything off of the 4 hour seems to be holding relatively nicely. Okay, so I do think we're going to get a relief rally and a push back up next week. You can see we don't have a lot of sellers here, so the sell volume is going to be on the light side, 30 minutes, 45 minutes. So we could, not saying we're going to, but you could get a ripper all the way back up to 667, 670 and put us back overall in this zone above 660 going higher. Okay, so we'll want to keep an eye on that. But these are going to be, they're pretty broad levels, ranges, if you will, for SPY. And again, FOMC, OPEX really drove the market down pretty damn fast. Let's look at QQQ. Same exact thing here. Wide ranges, okay? But the good news is with that, we have more overhead supply here on the Qs than we do on SPY. So I think the opportunity for calls could potentially be in the broader market, right? Where we have banks moving higher, airlines, cruises, casinos, retailers, so on and so forth. But ideally, getting back above this candle high is going to be pretty impactful unless we just consolidate in here and then, depending upon what happens in the Middle East, could go lower. So these are the levels that I would be watching for QQQ and SPY. Let's take a look at Apple. Apple was a real bear to trade. I did try to trade it on Friday, and I took two sizable losing trades. I mean, the market kept going lower, and Apple refused to drop. It just would not do it. These ranges are way too wide to trade, way too many candle wicks. So for me personally, I'd stay away from this. I just don't like the way this thing here is behaving unless you can get above 250.71 and then you can take it higher. Below 244 and change, you could take it lower. Again, I did have a lower level 4 hour pivot that I did try and attempt to actually short. And every time on Friday that we would even come close to pushing lower, they bought it right back up. And then look at this final 4 hour candle close of the day. Impossible to trade, right? It was really, really difficult. And the ironic thing is, this is only a 45-minute demand zone. So it is not like it is super strong, but you can see what they did back here on January 23rd, right? They pushed it down and then they literally bought it right back up. So I think as some things are rotating out of your Nvidias and your Palantirs and your higher alpha names, they're rotating into Apple because they just don't want to lose tech. Tech exposure, right? And so let's go ahead and take a look at where we're at on Google. Kind of similar things here on Google. I think above 302.79 looks good for calls. Right now, I would not be trading really within this zone. I mean, we can go ahead and expand it on the 4-hour. Let's drop down to a 1-hour. Yeah, I mean, again, above 302.79, going up to 308, potentially getting below the 4-hour of 298 to 294, but your best put strategy is going to be below this 294 with this black space going all the way down to 286. Okay, let's take a look at Meta. Meta, again, exceptionally weak on the overall charts last week. Same as all the others, right? Drifting, drifting, drifting. Huge buy in that last hour of the market close. We do have quite the overlap of buyers and sellers, but I do think if you can get above 596.72, we could definitely take a run higher. And then there is this little mini gap up here. You're not going to run into a ton of pressure. Let me realign this with the current time frames. There we go. That looks better. You could get a decent run higher. We want to see us, though, get above this 596. Let's take a look at Amazon. Amazon's another intriguing one in that it is one of the lower for put-call ratios. So right now it is leaning slightly bullish to the upside with most likely a price target of 225. So I do like this to the long side, not necessarily shorts. You can see what happened again on this 4-hour candle when they tried to push it lower. I mean, literally bought it right back up. So let's go ahead and check our levels. Really strong, trying to fight the drop to the downside. Obviously, it couldn't overcome, but into the close, it definitely rallied higher. And then what I would watch for on this one, again, if you get down to 204, or even watch, this would be more of a potential swing trade. Yeah, I mean, we're 6 of one, half dozen of another, but I really like this once we get above 209, right? 209 gives you some runway to 211 and then all the way back up to 215. Right now, we're just going to deal with this buy, sell, buy, sell, buy, sell, which is that overlapping liquidity to the upside and to the downside. Nvidia, significant relative weakness, pretty much the majority of the day on Friday. This would have been a great short. I do think that they are going to viciously protect this 170 level to go higher. So what I would watch for Nvidia is watch the 4-hour candle. Let's take a look at that. Again, a little bit of a hard one. We're trading aftermarket 172. If we go on a lower time frame, maybe it'll pick up some momentum here at 174 and change. But we are going to hit a little bit of short-term resistance. But again, if we can get above this 176, I do think we have some more room to the upside. So kind of watch your hurdles on this one, at least on the 4-hour and 1-hour time frames. I think that would suit you best. So I'll also keep an eye out on this one. Might have to rechart this depending upon what the opening looks like tomorrow. So we'll see how that goes. AMD has more potential to the upside. This one viciously holding this 198 level. I did do a fib from, and we could actually take it from, I mean, technically the pivot high, and this is something to watch, right? But this is the pivot high right here because this is the high candle. This is not a high candle. This is just liquidity. But what I would want to watch is possibly a really good put trade at 202.96, okay, which is where the 618 fib overlaps with a price level, okay? And so that would give us a high probability trade back to the downside. So somewhere in this golden zone, we'll see how this moves to the upside. Now, on the 1 hour, it was squeezing into the close. So we'll see how they protect this. And you can see once we get above these sellers and we get above the 618, we can move all the way back up to this prior pivot high here. So we got a lot of room to the downside. Not a lot of buyers until down here at 199. Not a lot of sellers until we get up here to 206. So I think AMD might be a good one, although their premiums have been really expensive to trade lately. Palantir, PLTR, let's take a look at that one. Again, I would want to get above the overall candle high here to go long, but there's still really good room to the upside in this one. To the downside, again, I think the hard part is, even though we're coming into low levels of overall supply, when they're getting down here, they are buying it right back up pretty darn quick. So you can see they're trying to protect this 148.50 level, 148, 149, okay? And then are they able to break above at least, the base of this candle? I want to see the base of this candle hold and then moving to the upside. Now, obviously, we're going to want to clear this 4-hour pivot to the upside to really get some momentum moving higher. But this is just kind of how I would keep an eye on this one. And let's just see how this plays out, right? I mean, you could even get a better entry down here if you want to take a little bit more risk on for a reject possibly up top. The other thing we could do too is we could watch, and I typically don't like to do this on these 15-minute time frames, especially when we're going overnight. But, where was the pivot high to the pivot low? And look at, again, we have the exact same thing, right? You have this 618 fib right at a price target that I highlighted, okay, where we want to get under. Now, here's the 50 fib. So this would probably be a good area if the market is weak, push up, and then take this one back lower. Tesla was my setup for the entire week, and I just missed it. I'm beyond frustrated with it because I kept saying, if we fall below 380, and that's where my prior price level was, we get below, it is going to drop, and it is going to drop hard because there's nothing holding it up. Same thing here. We have really nothing holding this up. So if the market is weak, definitely like Tesla, back to the downside. This is a 4-hour candle from all the way back here, again, on September 11th, 2025. We lose that, we have a long way to go back down into the 350s and 340s. As far as a fib level goes, I really don't have one here. I mean, there's really nothing good to anchor off of. I mean, we can with this minuscule push higher. Nothing, too fancy here. But if I was going to do that, right, where would I be watching? I'd be watching, again, pretty much right at that price level, the 370.24, 370.72 for us to reject and go lower. So what I want to see is how are they going to hold this? And again, this price level back here came from, again, a 4-hour on September 12th. So I definitely think that there's more room to the downside. I'm going to go ahead and remove this price level actually. And I'm going to move it. I'm just going to actually trade off the fib. I think that's the best thing to do, right? I really don't even need a price level here. We got one up here at 376. If we get above this, we could go to 384, do the gap fill to the upside. But right now, let's watch and just see how this reacts with the overall fib. I'm going to take a look at Oracle. This one, again, more relative weakness. I mean, really, it'll catch a bid and then they sell it off. Catch a bid, sell it off. This is very similar. What we have here, really, buyers and sellers on top of one another. Don't really like puts because we got a price level below it. But I think keep an eye on it, as it could be something potential that if we get down to 143, maybe a call trade. And then I'm going to look at a couple others. I'm going to look at gold and silver. Tried again a silver trade. I was swinging silver. And it just literally, what I was looking for was for it to come up and fill the gap on Friday. And so you could see that, we had a close here on Wednesday. And then we had, obviously, on Thursday the 19th, okay, I thought for sure with the market being weak, inflation going higher, that they would push silver back up. They did not. They sold it off, and I just had to get out of the trade. Just too heavily manipulated. So unless we get below 60.86, I don't see anything I like, and we got to get above 63.75 for potentially the gap fill to the upside. And then I'm just going to look at gold. Gold broke a gap to the downside, We created another gap up above. We have a small gap below, but this is the same thing, right? Just a lot of market manipulation. They sold it off hard, and then we got a brief rally, and then it just dumped and really didn't catch a bid in the closing hour either to really speak of, like stocks did. So again, I think gold below this 411.24. Look at a 4, yeah, and that's also the 4 hour. So that's what I'd keep an eye on. But again, look at how sporadic this is and how this thing just moves. And when you're trading options in this, you cannot go heavy on size, because you could 1 minute be at $1.20, and then the next minute you're at 80, and then the next minute you're at 204. I mean, it's crazy how manipulated the contracts are in gold and silver. But these are the levels that I would watch for the upcoming week. Again, patience. And the positive thing is FOMC is behind us. OPEX is behind us. And we should get a cleaner week with price action. So with that, everybody, have a fantastic week ahead. And if I can help with anything, feel free to reach out. Take care. Thanks for watching. If you haven't already done so, make sure you sign up for the free weekly watch list emails to get early access before the video drops here on YouTube. See you next time.